Hello guys, welcome to the YouTube channel. For those who've been here, thank you. For those who are new, welcome and do subscribe. I would appreciate it. As you guys know, we've been making money throughout all this time, and today we hit stop loss, right? So we lost some money, send the signal, and we lost some money. So as you guys can see from the title, it's not about gem and dates in this video. This video I asked the VIP members if I should make a video for them about the US markets, and they approved. So this is why I think I can add some value there also, right? So for those of you who don't know, every quarter, which is 3 months, in the US, the companies that are listed on the Nasdaq and the New York Stock Exchange are, by law, they must release their quarterly earnings, right? So there's an earnings report. Those things are fundamentals. In fact, they are the most important fundamentals. The other ones, they are important, but those ones are far more important, right? Most people don't know about them, so I figured let me shine a light on them and maybe they can help you figure them out. So we're gonna analyze this whole week, right? So today being Thursday, that Wednesday, Tuesday, Monday, right? So first, let me start with what is the Nasdaq 100, because I'm going to be focusing specifically on the Nasdaq 100. The Nasdaq 100 is an index that is comprised of all these companies. There are actually 100 of them, but there are 102 things that are listed here. Why? Because some companies have two listings of two different types of shares, like Alphabet here. Alphabet, they've got this one and this one, right? But okay, now that we know it is a composite, now the question is, why is Apple number 1, why is Alphabet number 5, and why is Costco number 9, right? The reason is that these placings, they're affected by the market cap of that company, right? As a result, because they do not have the same market cap, what happens? Apple, out of the 100 companies, it weighs 12.8%. Microsoft weighs 10%, and so on and so on, right? So if Apple is responsible for 12% of the entire 100% of the entire index, that means Apple has a bigger significance than Intel here, which weighs only 1.53%, right? Okay, so that is quite clear, right? So now, remember I said every 3 months they are compelled to do what? To release their earnings report, right? After every 3 months. So it's been January, February, March, now it's April, right? The 3 months have passed, the first quarter has passed. Now on April, they are releasing what? They are releasing their quarterly earnings. So now let's go to this, right? Most people are familiar with the economic calendar, right? Which is countries, right? Which is reports from countries on what's going to happen then and there, like the interest rates, the industrial product, the retail sales, all those things, the common ones, right? But there's a whole lot important things like the earnings calendar, right? Which is far more important, right? Because it's an index of companies, and companies shall be judged by what? Their performances, and their performances will be shown by what? Their revenues, right? So now, today in the market, right, you've got companies that release their financial reports before the market. You've got companies that release their things, their earnings during the market, and of course that also means they've got companies that reduce their things. They release their reports after market, right? Now, as of today, no, not as of today. Today, Apple, Amazon, Intel, which are all part of the Nasdaq 100, are going to be releasing their what? Their reports, right? Their financial reports, right? So look at this. This, forget the earnings per share forecast, right? Forget the earnings per share. Look at on the revenue, like this revenue, right? Sorry for canceling it. The revenue, focus on the revenue. The analysts are saying, okay, we don't know the revenue for now, but the analysts have a forecast. They are forecasting that Apple should have made $94.15 billion in the past quarter, right? Amazon, they're expecting they should have made 116 billion, and so on, right? So now what's going to happen is that the report is going to come out and we're going to see the actual revenue that they made, right? Okay, just like in an example, I'm trying to find something that I can pronounce. So okay, Baxter, right? They were expecting Baxter to make 3.68 billion. They made what? 3.71 billion, which is why it's in green, right? Because it surpassed the analysts. Okay, so now the reports are going to come out after the market has closed, right? 10 o'clock South African time. So now, when the markets are saying there's going to be news that Apple is going to release what? Apple is going to release their finances. What happens? You knowing that Apple accounts for a lot of percentage on the index, you should expect the market to do what the market did today, right? Which is the market opened. It opened, it went up, and then it started going down. Why? Because here's the thing, right? If you are setting a target here, right, and you say you're gonna release the numbers of this target after the market has closed, what do you expect to happen when the market opens? Obviously, I'm not gonna sit here and say the analyst says they're gonna make so much billions, so what that means I should start buying it. No, you actually go against them. You sell it, right? Just so in case if they are wrong and the news come out that they actually didn't even reach that target, which is bad news, and the market continues falling, you were right all along when the market started opening, because they are only going to release their things when the market has closed, right? So you make that money and that money, right? Because analysts are not 100% correct, as you guys saw here, right? As you guys saw here, they are predicting certain numbers, but they're getting different numbers. You see, right? Those are the numbers that are getting instead of the predicted ones, right? Just that here they were lucky they're getting there. They were underestimating them, and the companies were overperforming, right? But just in case they are wrong, you don't want to be on the wrong side of what? Of the news, right? So now, considering that Apple, the news that are going to come out is Apple, Amazon, Intel, right? Just to name the ones that are going to come out that are on the Nasdaq index. Obviously, you expect such three companies, right? Apple, Amazon, with Intel, Intel, right? Look at this, 12, 7, 1, right? All these three companies that account for almost 20% of this entire thing, right? So now, that's a significant amount of percentage. Now, imagine they all disappoint. What do you think would happen? The market will what? Will crash so bad that you guys you'll be surprised, right? So now, it's also part of the reason these big important companies, they release their things after what? After the market has closed. Because if the market hasn't closed and there's still a lot of retail traders in the market, what would happen? If they release the news while the market is open, firstly, the news will be bad from the expectations that the analysts might be wrong. And then they release some bad news, right? This further disappointing. While there's still so much liquidity in the market, then what happens? The market crashes so much so that people are going to lose a lot of money. But now if they do it after market, they don't have to worry about a lot of liquidity, because the only people who will be trading is who? The big banks, who are what? Aftermarket traders. It's like that, guys. Unfortunately, that's just how things are. So now, let's go back to another day where the market crashed so much. Okay, let's do this. Before we do that, let's go to what happened on Monday. Look on Monday what happened. Companies like Coca-Cola, Activision, Otis, whoever those are, those are the companies that release their news on Monday. None of these companies here, well, I'm not 100% sure, but I'm certain that most of them here, they account for close to nothing on the Nasdaq. That's if there's even one that appears on the Nasdaq 100. I don't think there is, right? So as you go on Monday on the charts, this is what you'll see. Thursday, Wednesday, Tuesday, Monday, right? On Monday, we're coming from the previous week. What happened during market hours? The market hours happened around this area, right? They went up, went down, and then that was it, right? And then what happened? Started recovering slowly. All this recovery here, it's because of what? It's because of this crash from the previous Friday. This crash. The market was exhausted from selling. So what happened? There was value here, right? People started buying. When the news came out of some finances that are useless, what happened? The market did not react that much, and what? It continued going up. But let's go to Tuesday, right? Look at Tuesday. Look at this big crash, right? It was stable there and it crashed. It crashed, right? Coming down. Why did it crash? Okay, let's go to the calendar, right? On the calendar, you'll see on the Tuesday who was releasing the news. The Nasdaq companies like Microsoft, the two alphabets, Visa was there, Texas Instruments was there. As you guys can see, these are very important companies on the Nasdaq 100, right? Imagine they're all disappointing, right? For instance, look at it. This Alphabet was expected that to do that. They disappointed. Now imagine Microsoft, it also disappointed. Visa, imagine it also disappointing, right? But now the good thing is they did not disappoint. Well, they did, but you could see it coming from a long mile, right? Why? Because these are very important companies. When you come to the thing, when you come to the weightings, you'll see that the Microsoft, look at it, 10%. The two alphabets, 3% each, right? PepsiCo even there, 2%. You understand what I'm saying? These are very important companies, and as a result, the market did what? It crashed so much so that, yeah, I'm coming now. The market crashed so much so that in case they disappoint, they were right from the beginning, right? And then as a result, went up because it was already exhausted when the news came out after market trading, and then it stabilized, right? So you guys should look into that. And if you were to check on Wednesday, you'll see the companies that released the news on Wednesday. They were boring companies. They didn't, sorry for that. They were boring companies. They didn't release a lot of what? They didn't release a lot of important news, and they don't weigh much on the thing, on the Nasdaq composite. Let's go on Wednesday. You'll see them. Where's Wednesday? Sorry. Wait. Where's Wednesday? I'm sorry. There's Wednesday. It's Meta Platforms, T-Mobile, and all those things. Just go check them. In relation to the thing, to how much they weigh, right, on the composite, right? So if you come, you'll find Meta is here, just 3%, right? Not as important as the ones that happen on Tuesdays and the ones that are happening today. So guys, I know this video took too long, but I think that is very important because there will be another 3 months. There will be another quarter where the companies are going to release their results. And as a result, you guys should be prepared to make some money, right? So when you come here today, you find Apple. They're going to release their results. The next time they're releasing their results will be in August the 2nd, right? After another quarter. Because it's going to be May, June, July, right? No, sorry. Yes, May, June, July, right? And then August, that's when they release their quarterly earnings. So guys, I hope that makes sense, and I hope it adds value to your trading lives. So cheers for those who have subscribed. Thank you for those who didn't. Please do so. I figured I would add value like this. Since today we took a loss, remember, if I can't give you money for today, I'll give you money in the future. Peace out, guys. Thank you for the love. Thank you for the trust, and I hope you guys improve your trading careers. Cheers.